And speaking of equities, Rajeev, what will earnings look like? Are we going to see a drastic revision when it comes to earnings?
Well, we've just come out of the initial part of the second quarter earnings season, which I think went better than expected. Investors were worried about earnings and were worried about downward revisions to outlooks. And actually, it came out fairly well. Now, we're looking to the rest of the earnings season and into Q3. That's where we can get a bit more worried. But let's remember that equities have really priced in quite a series of poor earnings data by bringing the price-earnings ratios down quite substantially already.
Right. Rajeev, I do also want to quickly get your sense on the differential trade. The dollar at 106.6 versus emerging market currencies. I would have thought that it would spill over into an EM crisis. We haven't seen EMs tumble as much. Do you worry that that could be the case down the road, or not quite? This time is different, as they say.
Well, in the scenario where I'm expecting a mild recession, I think that wouldn't be the case. Emerging market central banks were quite quick to start hiking rates early. They did so way before the Fed. In fact, some of them, like Brazil, are getting to the end of their rate hiking cycle with rates at, policy rates at high levels. So they did an early tightening. Their currencies did adjust quite significantly. We've seen weakness in EM currencies since the beginning of this year. So the adjustment has taken place, and they will benefit once we get past this period of front-loading of Fed hikes. But if, however, the recession is not mild and the Fed has to tighten even more than what we've priced in, that could put further stress on emerging markets, indeed.